What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Randy Smith. How you doing today, Randy?
I'm doing really well, Dan. Thanks so much.
Awesome. And you should probably be as excited as I am because today we have my very favorite audience member here watching us. And that's just awesome, right? And why is my favorite audience member watching us? Is because this is a chance encounter. And the deal with that is I interview commercial real estate syndicators, investors, and operators. And the reason for that is part of it's the law. You basically have to know a lot about a person before you can actually do business with them and give them access to these private deals. But before we get too excited on stuff like that, Randy, do you want to introduce yourself a little bit briefly for the audience?
Yeah, absolutely. And first of all, I had no idea that the ideal audience attendee would be here today. So I'm a little more stressed than I was when I first got on here. But thank you for letting me know.
Well, they're so good looking. How like it's disarming though. Right? Just like try, just don't make it weird though. Okay.
Sounds good. Sounds good. So yeah, as you mentioned, my name's Randy Smith. I am recently retired W-2 business to business sales guy. I was in corporate America for about 25 years. Started as an active investor doing out of state BRRRR strategy turnkeys, and then found the passive investing space and just fell in love with it and invested in a ton of deals over the last couple of years. And then after leaving my W-2, I started the fund to fund model with a company called Impact Equity. And I am raising dollars for just amazing deals here in Phoenix, Arizona.
All right, beautiful stuff. So let's find out what else is going on. I'll hit that button, and then I need to hit this one. Ding, there it is. But wait, check your 8. It's your 8 and not really like the behind you kind of 8. But on the screen it's your 5. So it's under this little screen here. You got to check it out to make sure that you don't have one of those awful red buttons down there because the gray one's a lot better. But
Okay.
let's go in here. All right. Maybe you can take a look under your left hand to see if our audience member has hit the subscribe button or not. But anyway, let's get on to motivations. Now, I know that everybody who comes on this show is motivated to do commercial real estate, but they might not know what they're going to be doing in it. Randy's more established, but the motivations, I found there are really 5 distinct ones among commercial investors. So I'm going to go through all of them. The first one, some people, they already have the assets and they rely on the cash flow that comes from owning those assets to make ends meet. So when inflation rears its ugly head, what they do is they borrow against the assets that they already have and then make those new acquisitions. That's why they're doing it, is to stave off inflation. Now, that's not what I'm up to right now, but it's a great reason. What I am up to is trading time directly for wealth. I have a background in tech. I own a CRM agency on, online sales and funnels and all that kind of fun stuff, and have for 12 years now. And the problem that comes from being a high wage or salary earner is you're paying more in tax than anybody else. So it hit me as like, well, how do I go directly for accumulation of wealth, which it has a better taxable status instead of, so basically I'm cutting out the middleman, which is just good business. Yep. So the next, I find it's the most common answer for beginners anyway. They say, hey, I want to retire sooner. Honestly, I think you need to be doing something real estate related to even leave the door open for retirement, the way that inflation's been going. But that's what some people are up to. But they want to, take control of their time, maybe work fewer months per year, fewer weeks per month or whatever, but not the next group. They're so ambitious. They want to buy their entire hometown. They're looking for the generational wealth. They want to make sure that their great grandchildren never have to hold a day job, and they're going to hustle in their 90s to make that happen. Whereas the last group, they're also going to hustle, but they found a segment of society, or maybe it's animals, the environment. They want to send people to space. But I like to say that they want to save the world, but they recognize that there's a financial component to that. You have to have a serious nest egg to make a serious impact these days. So of those 5 different motivations, then, Randy, what combination of those really resonates with you best or describes you best?
Yeah, so awesome question. I would love to say that all of those are kind of the thing, but probably today it's wealth generation with education, and trying maybe not save the world, but certainly help educate the traditional investor and teach them how they can leverage this amazing passive investing tool to help decrease their dependence on their W-2. So by educating folks on how to do that, if I can make a few dollars doing it as well and help with my investments, then it's really hitting both of those buckets that are really important to me.
Yeah, that's beautiful. So the next question I have, though, it's a little bit different. I even feel maybe it's a little bit tongue in cheek, but it's to get an idea of your tolerance for risk. So please fill in this blank. There are many popular investment asset classes, popular as in there's tens of thousands of people involved in it, but I think blank is too risky. What do you think is too risky as an investment?
So I like Bitcoin just scares the heck out of me. I know nothing at all about it. I hear all the excitement. I see people making money, but I also see people losing a ton of money as well. So I think it kind of goes back to that piece where if I'm not educated on something, I need to stay completely away from it. And I like the old adage, like in the gold rush days, it wasn't the people that found the gold, it was the people that sold the picks and the axes. So I love Bitcoin mining. I think is fantastic, but Bitcoin itself, far too speculative for me.
Excellent, excellent. I love it. All right. So then the next part then is more distinctly real estate related, and this is for the benefit of our audience. If you go to dandoesdeals.com, you'll get your very own Dan Does Deals commercial roll die with the 6 different core roles in a commercial deal. And because I'm a dummy, it doesn't even ask for your email address. Okay.
Oh, no.
Go ahead and download it and print it out. And that's the risk I'm willing to take here, because I want to make sure that you can effectively communicate on the subject of commercial real estate, because you're not going to get anywhere in this business until you can pull that off. So
Okay.
the other is figuring out what side you're on. You're much more experienced, so this is going to be review for you. But for your benefit, let's talk about what's a repositioner. A repositioner is somebody who looks at a lot of different properties. It's an acquisition person. And what are they doing when they look at all these papers and do this paperwork? Well, the first thing they're doing, there's a fancy word for it. It's called underwriting. And that means they're doing the math. They're figuring out, first of all, hey, is this building actually making the amount of money that the seller is claiming it is? Because that's important. And the other thing that they're doing, which is why I call it a repositioner, is they're thinking, how can we change this business so that we have more upside? And there are 3 main tools in the repositioner's tool belt to do that. The first one is to find more advantageous lending by finding better financiers. But let's assume that that's not on the table. Maybe then the repositioner will focus on operations and stop more of those Benjamins from going down those toilets. But of course, there's more about operations than just unclogging toilets and mowing lawns and taking out trash and all that kind of fun stuff. There's also a marketing aspect, which is one thing that some sponsorship teams are taking me on for, which is to lower vacancy rates and things like that. But there's also some automations you can do. But anyway, making those efficiencies, those cuts, or finding extra revenue streams in operations, in often cases that won't cut it right now because real estate's been so hot. So they probably have to rely on a contractor team to go in there and do the renovations, as you say, in a house, but it's a value add. So if you make the units actually nicer, then the new tenants will be happy to pay more than the previous tenants were. And so that's the other way to get that upside. But If the repositioner is like me and from the internet, they're going to need a local as well. They need somebody who's going to be there in an hour or two, because that's not going to be me. So when the repositioner has the property figured out and this team here all planned out, they'll turn around to the financiers. And if that's you and you're new to this, you just are getting all this done with your friends or whatever, you might have a surprise when you go to the financier, because they're going to say, okay, you don't have all the pieces of the die yet. And it's like, well, what am I missing? Well, who's your KP? You're what in the who now? Now, a lot of coaching programs, they kind of skim over this piece, but to be eligible for a commercial loan, somebody in the fold has to already own a similar asset, okay? So even if you've got the dough to do the down payment on a 350 unit apartment complex, if you want to get a loan, somebody in the fold has to already own one. Now, on top of that, you also have to have a certain amount of liquidity, and then you also have to have a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Randy, I see that there's a financier aspect of what you do, because you are involved in the investor relationship management, and then you're also finding a bunch of KPs then to figure out where to deploy. Have I got that right, or what would you consider your core competencies or contributions for your next deal to be?
Yeah, so absolutely. I am basically bringing the investors to the operator is my core competency. So over the 25 years in corporate America, I built a huge network, and having a sales background, I'm just really good at introducing those two parties. So that's my core competency.
All right, beautiful. So then on the deal side, because we're usually talking to the people who are doing the repositioning, finding these properties and all that sort of stuff, it's important to know what the ideal property is. But in Randy's case, it's also just finding out what's the sweet spot in general. So when commercial real estate investors are asking each other, all right, what's your buy box? What's your ideal property? They're really talking about three main things. First thing's geography. So which states, possibly which counties, possibly which neighborhoods, it's all going to count. Second one is the size of the deal. We're generally talking about multifamily in this show. And so then you're talking about unit count to decide the size. And that's also true in a small retail and office, but like industrial or warehousing, it's in square footage. But the third one is the one that kind of bugs me, because it's the same word for two different things, and that's the class. Okay, now the first meaning of class means the condition of the building. So is it old and beat up? Is it up to date but ho hum, or is it lavish and brand new? That's the first meaning of class. The second meaning of class has to do with what's the crime rate like where the property is located, and what are the school districts like for that property. And both of those two are rated with the system just like in grade school, where it's like A plus or B plus, B minus, C plus, and so on like that. So Randy, as far as deals where if somebody has it in hand and is looking for basically a buyer or someone to syndicate it for them, or whatever it is that you do, what's easier to say yes to and more difficult to say no to as far as those deals?
Yeah, I like how you asked that question too. So primarily I'm working in the C plus, B minus class range, always in the value add space, 100 to 300 unit apartments in the Phoenix metro area. Very specific buy box. Yes.
Yeah. It's really nice to know that it's like, okay, well then, you got to talk to Randy in that buy box, because otherwise if you're not with us, you're against us, right? No, it's not true.
There you go. There you go. Yeah.
Right, exactly. So, but the next question then, it sounds like you're always looking for private financiers. It sounds like you probably have your 506c fund or something like that, or your fund of funds where accredited investors are open to join. So that means you're probably looking for financiers. Usually when people come onto my show because of the 506b me thing, I point out that you're not allowed to entice investors if you are doing private deals, which are 506b. So I say, don't entice investors, whatever that means. It's like sounds like you're shaking a donut in their face or something, right? But anyway, so without enticing investors, the thing that's really awesome is that all of us are better suited to help some people in commercial real estate than others, maybe because it's so multifaceted. Me personally, I'm always looking for more sponsors and KPs, and the reason for that is because I'm looking to apply more of my marketing skills and my tech skills with CRMs and whatnot to a sponsorship team. So they have to have some sort of foundation before that's going to work. But how about you, Randy? Who are you better suited to help than others in commercial real estate?
Yeah, so my target, my avatar that I'm really focusing on is the traditional S&P 500 investor that has an interest in the real estate space, but is very, very new to it. So I've heard recently that your ideal avatar is who you used to be. And that's really who I'm focusing on, is folks that have done well in their W-2, don't have a desire to be full-time investors or full-time operators, don't necessarily want to be active, but they want other options to place their capital or potentially invest in. And I'm really trying to educate and handhold that audience, because the opportunities that come up and become available once they do get educated can just be life-changing, like it has been for me. So my goal is really that rookie investor that I can help educate and handhold and introduce to just fantastic opportunities.
All right, beautiful. And so the next question then would be the best way to get in touch with you. Me personally, LinkedIn is the best way to reach me, because I'm there all the time. And I know that we cross paths somewhat through that, but Impact and Equity and Randy Smith, what's the best way to reach you?
Yeah, so Randy Smith on LinkedIn is my primary source. I've spent, like I said, 20 years building that professional network there. So that's probably the best way to reach me. Of course, you can go to my website, impactequity.net. I'm on Instagram under @salesguyinvestor. And you can connect with me through the website, or LinkedIn is probably the easiest way to DM me. So.
All right, awesome. So then the last thing, it's actually not for you. It's for you in the audience, which once again, under the QR code, if you just be careful, you don't want to like sear your eyeballs by staring at the big ugly red button. But this is my warning, there might be a big ugly red button that will sear your eyeballs, and the only cure is to click on that ugly button fast, and then it'll go gray, and then your eyes will be fine. There'll be no harm done to your retinas or your corneas. It costs you nothing, and it means that YouTube might start paying for these videos instead of me, that's my vested interest. But all jokes aside, all it means is that these videos might show up in your list of suggestions. You could ignore those if you want. I just appreciate the fact that you spent the time with me. Just like Randy, I appreciate you making the time, spending it with me, and getting to know what you're all about better there. Thanks for joining me.
Absolutely. Thanks for having me.
Awesome.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.